On YouTube. To everyone in the world.
I don't really understand, like, what are you broadcasting?
A trading session. Doing live trading.
So you're actually trading? So
I'm actually trading
you're not
now,
speaking or anything?
Yeah, no, I'm speaking, but I'm just chatting, shooting the breeze, talking about trading, looking at the news. Like a whole range, like the full process involved in trading markets.
Right, I haven't heard you say anything.
No, I need to go for a leave.
Are you on mute now?
Yeah, it's on mute, but it's got an intro. I wish I could stop my phone from right. Okay, so the mic is not on mute, Rich, because it looks on mute. Okay, we'll get started anyway. Okay, you can hear us. Okay, that's a bit strange. Right. Okay, Rich, I assume you can't hear us now then? Rich, can you still hear us? Oh, really? Hello and welcome to the Live Trade Room YouTube channel. This is the home of high probability trading. We're very excited to get going with this channel. We are in temporary accommodation at the moment, obviously largely due to COVID restrictions and things like that, so do bear with us. And we're very excited to be launching this live trade room every day, where you get the opportunity to come on board, come and join us. We'll show you how we set up our trades, what we look for, how we look to trade them, with one aim in mind, and that's to make consistent returns over a period of time. So just before I begin, if we can just start with our risk warning. Of course, it's very important you take on board and fully understand what the risks are involved in trading financial markets. It is probably the aspect of trading that most, especially new and inexperienced traders, can perhaps not appreciate from the outset. The reality is, for us when we trade, your ability to manage risk is what allows us to be consistently profitable. So it is a trade-off. It is one versus the other. So please take a brief moment to familiarise yourself with with our risk warning currently up on screen. So let me take you through basically just a little bit of, if I bring up our trading platform currently up on the screen, I'll just kind of show you around. So currently up on screen we have obviously our trading platform, and just at the bottom of the screen there you can see we basically narrowed down the markets that we look at, and we have a means in which to do this. So we want to trade the most liquid markets in the world. So we're talking about our foreign exchange markets. We're talking about 6 trillion in exchange on a daily basis. Very, very liquid, very volatile, gives us great opportunities. So we've got about 10 different currencies, all your dollar pairs, and we have a couple of yen pairs in there along with the euro pound. In addition to that, if I just scroll along the bottom of the page there, we've got a couple of commodity markets as well. So we look at the gold market and we look at oil. And we always want to see how these commodity markets interact with the US dollar. Obviously they're denominated in US dollars, and as the dollar goes up and down, it can have a direct correlation with the price of commodities. And then if I just slide across even further, we have our major global indices markets. So we want to see how the stock markets perform in various different jurisdictions. So by far the biggest player in the indices markets are the US indices markets. So it is important for us that we do have a comprehensive understanding about what's going on with the US indices. They're very influential, and we have this interaction between the central market monetary policy and what's happening in these stock markets. So if I just take you over to the S&P 500, for example, I'll explain what's going on in my ear as I'm talking in just a moment. So what we can see is how those companies that are listed in the S&P 500, you can see how they performed over time. So you'll have our time axis along the bottom, and you'll have the price movement along the right hand side of the screen. This is the same obviously for every single chart that we trade, and we can narrow it in. It's MetaTrader 4 is a very intuitive platform. It allows you to really see what you need to see when you're trading these financial markets. So looking at the S&P 500, so we can see how those 500, the most by large cap, are within the basket of the S&P 500. So it's a really good indicator to be able to assess economic health. So the S&P 500 is a key indicator for performance in the US stocks. Along the bottom we also have the NASDAQ, which largely built up of your tech firms. We've also got the Dow Jones Industrial Average, we've got the FTSE 100, we've got the DAX, and then in Asia we have the Nikkei, Japanese 225. So again, these will give us a very interesting heads up, and the reason why we look across multi-asset class, that we don't just focus on our foreign exchange markets, is we look for the correlations across the indice markets, the impact that has on the dollar, and also we can look at major geopolitical events like Brexit, the negotiations between Europe and the UK. I'll just take this out for just a moment. I'll explain what this is in just a second, because I am getting more information in my other ear, and I'll fill you in on that in just a moment. But just to explain the correlations between your different asset classes. So understandably, why most traders, when they enter this market, they focus on foreign exchange. They're far more volatile. You get some really good opportunities, and they're cheaper to trade. So fully understandable. That's exactly the reason why. However, it does help you to broaden your understanding and knowledge of these markets. Take on board what the indice markets are doing, because they're all correlated to a certain degree, and what it allows us to do is it actually gives us better high probability trading opportunities if we can understand how these markets correlate with one another and look to get all your ducks in a row when you trade these markets. And that really helps. It helps with confidence, it helps with understanding and knowledge and things like that. So this is all the type of stuff we go through on a daily basis. We do hope you can join us live. We'll be going live from about 12 o'clock every day, so do feel free to join us. And of course, click the subscription button, click the bell, and you'll be notified every time we go live. And if we post, we're going to be posting a whole wealth of trading related content over the course, on a weekly basis. So do click the subscription button, and do please click the bell, and you'll be notified whenever we go live. If there'll be a major news event, we'll have the ability to go live fairly instantly, and it'll be hopefully a really nice environment for us to help you guys as best we possibly can. That's the name of the game. Okay, so that's just explaining the platform. We have all the markets along here on the left hand side in the Market Watch. Just at the bottom, it's quite an important tool. It's called a data window, and what that allows us to do is hover over any particular candlestick chart, and we'll get the information on that chart. You can get the information on that chart. Sorry, I think you can all hear me okay, so that's good. So you can get the information on that chart, and what we mean by information, we can clearly see the open price for today's candlestick. We can also see the recent high that we've experienced in this candlestick. We can see the low, and the close. So that's important. Obviously, once this candle closes, we're currently looking at daily time frames, and that's really an important part of our approach when we trade markets. If we understand what's going on the bigger time frames, that really does give us that fantastic opportunity to be able to trade these markets with a little bit more confidence. Trading for us is not about guessing. It's not about tossing a coin as to whether we buy, whether we sell. We have a set of reasons why we get into a trade, and we have a set of reasons why we get out of a trade. And that's really what we teach our traders at the Live Trade Room. So for more information, do go to our website, www.thelivetraderoom.com. We have a variety of different membership options, all very, very low cost, so it doesn't cost you a fortune to get a really good quality education with us. It's a very transparent trading environment, so we hope it will be of huge it'll become a very important tool for you guys to be able to trade consistently over time. Okay, so let me explain what's going on in my ears. I can listen to the broadcast through one ear, and in the other one we do have a live streaming service, which so I'll be getting constant updates, and in fact we'll be making this available to our traders. You can look at a whole variety of different squawks online. They're really, really quite expensive. We are in the process of hopefully making a fairly affordable squawk, a live feed, giving you sort of real-time information. in real time, which is really quite important. What we need to do, because we're obviously entering the US Open at 1 p.m. So that's not to be confused with the stock market open, which is at 2:30. So when you trade contracts for difference, you can effectively trade 24 hours a day, 7 days a week. Now there's periods in which there's reconciliation and the markets do close for small periods. But broadly speaking, you will be able to access these markets 24/7. So with that in mind, we do prepare ourselves for the 1 o'clock open. The US markets, it's when their cash markets open, and we want to prepare ourselves nicely for that. Just to give you a little bit of context in terms of what we do with our traders, we like to think that we've got a fairly coherent program of support and education here at the Live Trade Room. So what that means is we have a live trade plan every evening at 9 p.m. UK time. That allows traders to come online. We discuss all of these 18 different markets. We discuss the fundamentals behind these markets. We discuss the sentiment. We discuss the technicals. And what we do is we narrow down the opportunities that we're going to be looking at ahead of time. So it is a live trade plan webinar. It allows you to, as the markets are closing, it allows you to put together a fairly concise list of trading opportunities and the levels at which we would be looking to engage those opportunities. So every trader has whatever market they're looking to trade. They've got three basic options: you can buy, you can sell, or you can do nothing. And occasionally, and like it has been over the last number of weeks, doing nothing has been, unfortunately, the decision of choice, so to speak. So what we want to make sure is that we are very well prepared for these markets, and recent market conditions has meant that is even more important than it probably has been for a long time. So it's that preparation that's really important for us when we trade. So we do that 9 p.m. It's about 30 minutes long. It's not that cumbersome. It's hopefully quite short and snappy, and we leave you with our trade plan at the end. So there's full transparency in what we do here at the Live Trade Room as well. Like I said, for more information, just go to our website. You can see the membership options, and we do pride ourselves on looking to keep recurring payments and monthly outlay to an absolute minimum. Of course, this can be a very lucrative environment. We just suggest, if you're new to trading, give yourself that time to learn this industry as best you can, and that's what we can help you with. Okay, so once we have our trade plan for an evening, it's very important that you can then look at your trade plan for the following trading day. So when you hit your trading desk in the morning or whatever time you get to trade these financial markets, what you want to be able to do is to be able to assess the fundamental news events that are likely to impact those trades. So that is effectively what we'll be doing. So let's have a good look through then the news channels. So for this, we shall get up Forex Factory, which is our it's the guide we use to access. So today is Monday, February the 8th. Of course, any questions at any point, guys, don't hesitate to post them into the chat box. This is kind of a sort of a live trading environment, so I'll be moving from screen to screen, but feel free to post any questions and we'll obviously get through them as soon as we can. Okay, so as you can see, and it's a really good indicator really, you have all the impact news events, and you can see day to day which days have slightly more impact than others, or they have news events which are likely to impact these markets more so than other weeks. In terms of major news events, and these are your fundamental news events that can have a direct impact on price. In addition to these very specific timed events, we also have our macro geopolitical events. We have our coronavirus updates and impacts and decisions made by politicians in terms of lockdown and monetary policy, central bank monetary policy decisions and measures. We also have fiscal measures put in place to try and deal with COVID. We have conflicts in all parts of the world, and we also have the interaction between big business, politicians and politics, and the impact that has on society at large. And all of these things just very nicely just create this little melting pot. We're having just, I think, a few issues with our internet. Okay, hope you're hearing us okay. It looks like everything is okay with the broadcast, which is good. I can just hear that our trading account is just in and out of reception. So let's see how we get on. So yeah, so when we look at today's news events, we can see importance today as far as the markets are concerned. Now, you know, we do, like I said, we do utilize a Squawk service, so we do get that kind of verbal confirmation analysis, which can really help. We don't need to be specialists in fundamental analysis, but certainly getting views and getting the information laid out as simply as possible in real time is quite a useful bonus and benefit to traders. Especially when you're day trading, so that's worth looking at. So today, nothing really to contend with. We want obviously the news events that are pretty close to the time at which we're trading as well. So you can see that with the next very, very minor news event for the day is close to midnight tonight UK time. So that's the news. Nothing really to influence these markets to any great extent. We can also have discussions about all sorts of sort of fundamental events. So it can, this live trading has the ability to be whatever you need it to be. So we will be in the heart of all of this. We will be actively trading and looking for those opportunities and assessing the probability of a successful outcome. Just bear with me there for a second. Okay, so we're going to go through the kind of the process that's involved really in making sure that we have a fairly robust approach to trading these markets. So for that we use technical analysis. We want to have an understanding of major highs and major lows. Sorry, let me so we have these levels, and these are more intraday levels. So unfortunately, just prior to starting this webinar, we had all our charts laid out properly with monthly highs and monthly lows, and then just as we're about to start, we opened up our trading platform and we seem to have lost some of that work which we carried out, which is very annoying and very frustrating. So just by simply putting certain levels on a chart and zooming out and making sure that you can identify these levels, you can very quickly start to build a bit of a picture in terms of what you would like to do and how you would like to do it. So we can see, and if I just get up our pen, actually that will be quite useful. So I'll bring that up on screen so I can sort of guide you a little bit better perhaps. So here we've had a previous high just sitting at this level, so we had a really good run to the upside over the summer. The markets went sideways for quite a prolonged period before eventually we saw that really nice breakout to the upside. So we got some further upside in this market as we went into the Christmas period. So we saw a high of the 23.49, the 123.49. We've seen a high in this market, and what we've seen since then is the very normal pullback, which is what you'd expect. And one of the things that we do when we trade is we take note of these levels. We want to identify what's going on at these levels, and what we like to see is the structural failure trade. So this is when the market fails to make a new high, and we get that next flush to the downside. So we're currently in this little region in here as things stand. So let me take that off. Let me zoom in a little bit more, and we can try to understand what's going on with this level. So for us, when prices interact with the levels, really about becoming levels of resistance where prices fail to close back above those levels. And this is one of the methods that we use to trade markets, which is support and resistance. And if you can identify that on charts, as you can see, our charts are very clear and easy to see and identify what's going on. We want to know what's happening with price. It's not our style to build lots of layers of indicators. Trading for us is like reading a book. It's just you need to learn the language in which you're reading and make sense of it accordingly, and skill involved in trading these financial markets. So this strong level of resistance, and we've seen that on 4 candlesticks, are all within a few pips of this very important level in here. And if I 50 level, so there's psychology in these markets play an important role as well, and you get these very important psychological prices where the markets respect, and we can see it over time. They see these levels and they look to respect them time after time again, and that's what technical analysis is. That's how traders can gain a very important edge in trading these financial markets. So we do like the fact that this market is rolling over to the downside. A major disappointment, I suppose, really, and I'll just share the information with you actually and just show you what happened on Friday, because we had non-farm payroll. There's definitely some problem with our internet, because some web pages are not showing it, and we don't have any issues with our internet, so it's a bit odd. I'm not too sure what's going on here at the moment, and my feed as well is intermitting as well, so there's something obviously external going on. So looking at this information, then what we have is on Friday, if I take you to Friday's lunchtime news event, okay, there was we had the central bank governor of the BOE, Bailey, was speaking as well. We had some Canadian dollar news, but the really important news of the week by far was non-farm payroll number. So these are economic data points that really they're good indicators in determining economic health. Of course, the more people in employment, the more taxes they pay, the more revenue that's generated, the more spend that can occur. So it's one of those important indicators to be able to analyze economic health. And of course, we get these figures from country to country. And this is the US, which is the biggest jobs market in the world. In every measurable sense of the word as well. And what we can see is we've had quite a sort of the unemployment rate had a very significant jump to the downside, but you see it's quite a distorted jobs number, which it has been, of course, since COVID. So we do wonder what impact that a news event should have had on the markets, and for us it really shouldn't have had that, the effect that we've seen. Again, the figures are a little bit on the distorted side, so it doesn't make sense to lose 49,000 jobs and to see the unemployment the unemployment rate reduced by 4 basis points. So that doesn't make any material sense whatsoever. Now there's professionals that do this for a living to try and explain the reasons behind these figures, and sometimes they can, it's like they can go down a bit of a rabbit hole as well with it. So by no means are these news events straightforward like perhaps they used to be. So that's the context to this little move that we're seeing here. So we can identify the euro dollar as a high probability trading opportunity to the downside during this session. Euro dollar to the downside. So what we're going to do, and it's just for the purpose of this being a Monday, we will have our trade plan every single sorry, bear with me. We'll have our trade plan every night at 9 o'clock. So this is a process that we're going to go through really between now and kind of 1 o'clock, just to make sure we have a means in which we can identify the opportunities which we regard as high probability. So for us, the euro dollar trade, to sell this off classifies this as a high probability trade to the downside. Now what we want to really understand in these markets, important to see if we're in a risk on or risk level in here. Again, we had all of these for one reason or another. We had them removed. They were removed with the platform. So it's the 39.09. That's the very, very important level. Risk on. There's a bit of hesitation in today's market. That's no major surprise after the very significant 4 out of 5 very, very bullish days and making all-time highs. All-time highs with our very important level for the Nasdaq. The Dow Jones is up at these levels as well. So moves to the upside in the equity markets is largely down to central bank intervention. So there's unprecedented amounts of monetary policy capital, quantitative easing, bond buying in the system as we know it, and that lends itself to difficulties. It was one of the reasons why 2 weeks ago we saw the fact that your hedge fund traders who were looking to short sell certain stocks were really blown out of the water. Now they were able to regain control last week, and they're probably unlikely for it to happen to the extent that it had previously any longer. but and I'm sure regulators will be stepping in and things like that. So so again, all-time high in the Nikkei as well. So we've got all-time highs in the Nikkei, the DAX, the Dow Jones, the Nasdaq, and the S&P. And the problem that this creates for traders and people looking at these markets is it doesn't necessarily make a huge amount of sense. Apologies for the quality of the video. We have bought a new HD camera because we thought there was a problem with the old one, and it just so happens it doesn't look like there was a problem with the old camera at all. There's something wrong with the settings, something wrong with the drivers of some kind, so hopefully we'll have that fixed for you tomorrow, I'm told. So we've really experienced some technical issues over the last few days, so bear with us, and we'll sort the quality of that video out for you. Okay, so we can look for a selling opportunity in the euro dollar. Yeah, so I was just explaining the kind of the problem that traders have with equity markets at all-time highs is that we've gone through COVID, the restrictions, the impact that has on demand, broadly speaking, the fact that the service sector has been completely shut down. The UK economy, for example, is a service. It's a service-based economy, so it's been hugely impacted, and yet there is this incredible resilience in these indice markets, and very much down to large amounts of capital injected into the system with a view that it funnels down, and whether that will be the case or not, it still needs to be determined. And what happens when these central banks start increasing interest rates? The cost of everyone's debts start to increase, and that's when you can have foreclosure and all sorts of credit crunch type conditions as well. So the central banks have kind of backed themselves into this corner. Arguably it was a necessary corner to back themselves into. You would assume it's a very, very different philosophy and policy than what we saw with the 2008 crash, which was a banking mortgage backed securities type credit crunch. So it was it had a very, very different theme to it. Some of the excitement with the indice markets is basically it's not on the current conditions now, it's on the conditions that we're likely to see in the coming months. The fact that we'll come out the other side of the COVID vaccine. The vaccine will be in play, we'll come out of the current conditions, the lockdown conditions will improve, demand will come back in, and we'll probably start to get back to some sort of normality. And keep this in mind, because I said at the outset we do look for the correlations, and it's important that we align ourselves as best we possibly can. You don't have to get it right all the time. You want to stack the odds in your favor, obviously, as much as you possibly can. Market conditions over the last couple of months have been really quite challenging, quite tough. So if you have been experiencing difficulties, a lot of retail traders have been, and it's about developing a trade idea and being able to execute that over time, and that's definitely been quite a challenging environment. Okay, so what other markets do we have? Today may very well be a bit of a slow trading day. We'll have to assess these conditions in just a moment. It remains to be seen whether we shall get a high quality trading opportunity today or not. What we can see with the pound dollar is it looks like it's created a bit of a high at the 137.57 level. these recent highs in there, and we've been grinding to the upside, but over the last month it has largely been price action which has moved sideways. So the market phase for this market is sideways. We can compare and contrast that with the euro dollar, which is pushing lower. So we have the structural failure trade to the downside, consolidation in the euro dollar. So we're not fans of trading consolidation because it reduces the probability of a successful outcome, and we generally look to stay away from trades like that if we can. The dollar yen has had a really decent move over the last week or so. You can see the market was been edging to the downside, and then we saw the structural failure trade pushing prices higher, and now we're up at these highs up here once more. So it's just the current state of this price action is not necessarily really high probability trade. So we do need to sort of take that into consideration. The dollar Swiss, you can see that we've been in a very clearly defined downtrend. Let me do a little bit of analysis on this trade. We've been moving sideways for probably 2 months, and again recently we have just broken out of this range again. Early last week we had some mild bullish price action, and then on Thursday we had a really sizable move, and we retraced 100% of that move on Friday as a result of non-farm payroll, which again doesn't quite stack up. And what we want this trade to do now is we have two highs up here, and you just need to be mindful. The euro and the Swiss franc are two markets that are heavily correlated. So generally speaking, you either want to trade the euro dollar or the dollar Swiss, just because of that correlation. But so again, like the euro dollar, we can look for the opportunity in the dollar Swiss to the downside. So the dollar Swiss lower. The reason why the US trading open is quite important for us, and not just for us, it's an important event in the norms of these markets, and it's due to the amount of capital that's potentially coming online. So you have all the traders and the institutions in the US all coming online looking for trading opportunities, and you're likely to then see a little bit more volatility in these markets, and as a result we're likely to get bigger price moves. Now it's not always as straightforward as that, because what we've seen on a recurring basis over the last year or so has been a lot of sorry, I'm just getting a little news update there on the vaccine, on the COVID vaccine front. So taking that into account, then the fact that we had that really strong retracement on Friday's price action, it doesn't necessarily throw us off the potential for more dollar strength. So the dollar CAD, we're in this sort of sideways moving price action. This is the new high for us to get really excited. Down at these lows, it doesn't really give us any major opportunity at that level. The Aussie dollar, just do a little bit of technical analysis, will take significant highs, significant lows. If you were wondering, the red line on the screen is a 50-day moving average. It's just a simple moving average. It is an important level for these markets. Price does interact and engage with those levels, the major sort of moving averages that we do look at is the 50 period, the 100 period, and the 200 period moving average. So the Aussie dollar, it's just moving sideways, just up with these highs in here. So if we start seeing some dollar weakness, then this would be a fairly decent opportunity. More recently, our bias has very much been to the downside. We've had this level in here, we've had, like the euro dollar, we've had this market make a high, and then we've had a significant amount of kind of sideways moving price action, really, where this market has made a low. Just to let you know, we very well may be able to broadcast the live market update feed in my ear. So we've got this little structural failure price action in here, and we do know that this market is a little bit of a period, it's now a strong level of resistance. So it could be a decent area for us to take this next leg to the downside. And as technical traders, what we're looking to do is to understand and identify what's going on, and just simply look to position ourselves accordingly. Sorry, I'm going in a bit too tight on that. So today doesn't give us that fantastic high probability trading opportunities, because it's pure indecision, and this is why we do our analysis on the daily time frame. So that level in here is currently pure indecision. But let's say tomorrow, if you're looking at this market and we make this high in here, tomorrow if we get some continuation to the downside and we break the daily low just sitting in here, that's your high probability sell trade to get the next leg to the downside. And this is why we use the word high probability, because not every market that's moving and trading in a certain direction is a viable and is a trade opportunity. Markets fly, and sometimes we're not in them because the market does not perform as per our expectation. So it's just a market that's flying, and those are not necessarily high probability trading opportunities. If they correct and if they bounce back to levels of support and resistance and we can build a case for it, then absolutely fine. But if we can't build that case for that trade, then obviously we don't look to get into that trade. So that's what we've got. George Geo, hello, hope you're keeping well. Thanks for joining us. Of course, that subscription, clicking that subscription button or the bell, we'd be very appreciative of that, if you possibly can, and we'll be notifying you then when we go live. We'll be going live every day, but we'll be posting a huge amount of online content. So you'll be notified when those little videos will start popping up. So do feel free, and everyone else currently online can just click that subscription button. We'd be very, very grateful indeed. Okay, so that's the Aussie dollar. Today is not a primed opportunity for that. Similar situation really with the New Zealand dollar. If I just capture these swing highs, swing lows, we're in quite a congested period in here, which is why it's not a high probability trade, and it's just drifting sideways. The euro pound, so this is an interesting market, and it has been quite an interesting market fairly recently, largely because of this little break that we've seen over the last week or so. So we've gone from a situation in these markets with really significant levels of support and resistance, really stacking up for long periods. Good stuff. Thanks for that. Yeah, thanks TJ. I know we had a couple of false starts. Actually last week. We had just a number of tech issues with it, I'm afraid, which we have luckily been able to overcome. But yeah, just really unfortunate at the moment. And we've got we seem to have some internet issues again today. So at least it's not interrupting this broadcast, which is great. But my trading account and this feed is just drifting in and out. So we'll have a look at that after this broadcast. But I guess that's the nature, isn't it, of live broadcasts. George, yes, yeah, please do. We hope to stay now as well. So feel free to join us daily. We shall be here, and it's a tough time at the moment as well, obviously with COVID and the difficulties everyone's going through. So from a trading perspective, we would be delighted to have you join us on a daily basis. And of course, any questions and things like that, feel free to just post them into the chat box. We can always discuss them, because there'll be periods, of course, where we'd be waiting for the opportunity to arrive, and we can discuss those topics and sort of help you in that way as well. So we've had an interesting move, and towards the end of last week, last Thursday, we saw a really decent move to the downside. And generally speaking, we really like these breakout trades to the downside, except the pound has been quite choppy, and we know that from the pound dollar. This is, it's been stronger, but it's really sort of poor quality grinding price action to the upside, so not fantastic. The euro pound, again, it's currently pulling back off the lows, but we want to try and stay in this to the downside if we possibly can. The opportunity is not just yet. The euro yen. Okay, so the euro yen trade. We can just put this level just in here. But the major swing high and swing low is the 12500 level, and what we can see from this market here is the fact that we've been largely moving sideways for the euro yen since early sort of mid-December. So again, from a high probability trading opportunity, it's not fantastic. What's going on here in the pound, it looks good, but it's not. It's caused us a few problems, because a lot of up until the last week or so, a lot of the pound strength, and we obviously know, like, the fast pace of the vaccine rollout has really helped the pound begin to strengthen. But outside of that, it's hard to justify a lot of the fundamentals for the pound. So when we trade, we want to try and get the fundamentals, the sentiment of a market, and the technicals. We want all of these three things to align almost for us to be able to buy or to sell any particular market. And sometimes you can have the fundamentals and the sentiment, but you can have really poor technicals. Like, these don't always necessarily fit to any great extent, but what you can do in situations like that is you can make allowances for it. You can sort of trade around it. Sometimes the technicals are fantastic, like the equity markets recently, but the fundamentals are really bad, and there's poor sort of sentiment, but you're seeing the markets fly. And situations like that, all they really do is just put a bit of a question mark in terms of some of our decision making. And there's nothing wrong with that, because that is what consistency is. Like I said, not all trades that are flying are tradable and allow you to sort of maximize profit and things like that. Hindsight is a wonderful thing. Being prepared and being planned and being able to execute your trade plan in advance is really what traders need to get their heads round. Yeah, and that's a bit of a process, I guess. So there's an argument that's been sort of just grinding with quite shallow kind of pullbacks, and you'd really want to have a strong bias for the pound to be able to get into that trade. And you can see today's we've just rolled off the highs, so again, not a fantastic opportunity in many of these currency trades today. So we just take some of these swing highs and swing lows and see how the market interacts with these levels. And there's one more in here. You don't have to be too precise with these levels. You just want to see, you want to take these levels and just predetermine how price interacts with that. We've had a structural failure to the downside in this trade in the gold market just last week. Thursday's sort of move to the downside, it was a fairly significant break to the downside. It showed quite a lot of conviction. Friday's been of a retrace, and again today, but our bias short term would still be to the downside, and what we're likely to get is a little bit of a, if this market can push back to the 1848 or the 1850 level, that would give us perhaps a high probability trade, if we're still below the 50 period moving average, to actually get into this trade to the downside. So again, these trades are stacking up, but they're just not there yet. The crude oil markets is on its way, as you can see, largely off the back of OPEC and JMMC agreeing further restrictions in supply, largely driven by Saudi Arabia. They really want to see this price of oil continue to push higher. That's really what we've seen, just a continuous move to the upside. So a really good breakout trade there above the 53.88. What we'd want to see and look to try and capitalize on now is to capitalize on a bit of a pullback. So it's gone on a bit of a tear, a bit of a $4 tear. If we see a nice constructive pullback, that's when we could place ourselves into crude oil to the upside. So the S&P 500. So moving on to the indice markets then. We're at all-time highs. A little bit of hesitation around these all-time highs was our analysis before this webinar, so that's not really changed just yet. No. So we have this sort of triple top in here. We've just made a new all-time high in the Dow Jones. The FTSE has a little bit of work to do, which may give us a little bit of an opportunity here, but the price really does, for it to be a high probability trade to the upside, unfortunately it does need to be above the 65-66 level to the upside. The Dow Jones, sorry, should I say the DAX, the German, the DAX 30, we've actually gapped to the upside, and we've effectively rolled back over to the downside. So again, when we see things in these markets that we're not that comfortable with, like a market that gaps higher, that comes back, closes the gap, and then starts to reverse again, from a high probability trade, it's not fantastic. So we don't necessarily want to go jumping in to some of these markets some of the time. So so that's the DAX. And then to finish off, this market has been on a very, very significant move to the upside. The 28,965 is our high probability trade at the open, and we've just seen a very, very strong accelerated move. We're not in the trade, unfortunately. So now up at these highs, you want to get a nice pullback back to this level, and there is your high probability trade to the upside. So tomorrow, if it does this, and then we get a little doji candlestick, and then we get which you always get, is the strong pullback. That could be your next opportunity to get in. So we want some of these markets to start behaving in some form of normal fashion now, if we possibly can. Okay, so we are left with two markets that we can really look at. Sorry, just bear with me 1 second. So that's the euro dollar. So we've identified, I just think it's the euro dollar and the dollar Swiss, isn't it? So what we do is we kind of go through the process of just looking. We can split the page up nicely. They're both correlated markets, so it wouldn't be a case of getting into both of these trades. So we know we want to sell the euro dollar and we want to buy the dollar Swiss. So now we can actually go down into these lower levels, these lower time frames, and we know which markets we want to trade. We know what direction we want to trade them, and now it's just waiting for those opportunities to arrive. So and obviously some setups are quite nice and easy and straightforward, and other setups are a little bit more convoluted and not adding up as nicely as you would like them to. And I think both of these for now is probably in the latter. So we've pretty much reversed a lot of Fridays. This is a sort of a V-shaped swing from low to high, and we've run into really strong levels of resistance in this market. Let me have a look at just the bigger time frames. So this is a strong level. If I can just bring it up just a little bit, this is a strong level of support with prices above. It's a strong level of resistance with prices below, and that's really been the catalyst for this little sort of rejection around the 120.50 level. Again, a very important psychological level, and prices are ticking lower, but they're doing so quite painfully. Let's just see where the 50 period moving average is in relation to the current price. That's really quite high above, so this is kind of a strong selling opportunity. Let's look at it on the hourly again. So let's just compare and contrast that from the opportunity potentially. And people want to get stuck on what time frame to trade. Why can't you trade the relevant time frame, whatever that happens to be? So if you get a certain signal on an hourly time frame, you can take an hourly type trade, and if you get a really good signal on a 15-minute, take that opportunity. We'd avoid tick charts and minute charts and things like that. It's far too volatile down at those lower levels. You're competing against automated trading systems and things like that, so it'll have your work cut out if you want to be consistently profitable at that level. It really used to be a real strong focus of ours to trade even tick charts, but that has kind of evolved over the years. So for us now, it's trading slightly bigger time frames. Now we can look at 5-minute charts as well, but looking at these time frames does give us that opportunity. So look, I'm just looking at what's going on here in the euro dollar. So we do like this market back to the downside. So there could be a viable trade here, and the low is the 2029, and we're only sort of 6 or 7 pips lower, and as I'm talking I'm sort of missing the opportunity almost, but we do have a clearly defined opportunity in here. So what I'm going to do is we're going to execute a trade. We're getting in probably 3 pips, 4 pips too late for the ideal entry. It's just because I've been talking a little bit too much, and we've got a clearly defined structural high here at the 120.53. So we're going to place this pending order, sorry, it's not a pending order, it's a market execution order. We just want to make sure we get our the 2053 we put, and we have a 2 times the spread rule to the upside. So 2057 is our we want to make sure when we trade, and I'm conscious of the price, so I'm just going to keep an eye on it. We want to get in as close to these levels as we possibly can. Sorry, bear with me a second. So we want to try and get as close to these, important structural failure trade levels as we possibly can. It's just pulling back just a little bit, so it's good. And we can place our stop loss just above. It's 2 times the spread rule, so 1.5, 2 pips a spread, and we times it by 2. Just gives us that, because what you don't want to do is to get stopped out if prices to just touch the 2053. So you want to. So I'll go ahead and get into this trade. We'll take a 2-lot trade. We do calculate our trade size accurately. So that is a sell trade that we've just got into now on the euro dollar. So we do expect a little bit further downside move in this market as a result of that analysis. You can see let me you can see our entry. Oh yeah, the volume. So you can see our entry there on screen. You can see our stop loss, and we'll be looking to. We generally look. We adopt a positive risk reward. We do place these trades through our signal service, through our website, and so when we get into these trades, we do notify our traders straight away that the opportunity exists, that we've got into it. We don't by any means want to trade for you. We want to teach traders how to make the decisions themselves. Of course, if you can join us for a period of time, you get to really know the inner workings of our approach and how we look to do it, and we want to simplify things as much as we can. It's very important that you don't overcomplicate trading, and you look to stack the odds in your favor, and that just takes a little bit of time. Everyone wants to be hugely profitable straight off the bat and make a lot of money trading, and very rarely do we ever see that. So there is a little bit of work involved, bit of commitment, and we can certainly help you with the rest. In terms of formulating those trade ideas, and most importantly executing those trade ideas. So we do want to get into this sell trade to the downside, as you can see. So let's see if we get that little compulsive move to the downside, and we're looking for, we might be able to trade this down to these levels, maybe even lower. We'll see how price performs, and what we want to do is to look to mitigate risk as quickly as we can. So that's target number 1 for us, is to remove risk. Target number 2 is to then focus exclusively on profit, and we do it by a sort of a step-by-step, depending on the price action. We look to make those decisions as often as we can. Okay, so I'm just conscious of the time. Today we do need to pack up a little bit earlier. We're unfortunately, like everyone else, we're juggling trading, of course, with other responsibilities at the moment, and trading is or should I say, making sure that we get through this period of kind of these current lockdown conditions with everyone fit and healthy and stuff is also really quite important. So there is sort of time constraints put on us to a certain degree, but that's why we utilize our signal service. We don't necessarily need to be trading 6-7 hours trading these financial markets anymore. we've kind of moved beyond that. We used to trade the European Open and the US Trading Open exclusively. Now we're finding opportunities at various different times of the day, and for us, we want to be opportunity focused, not getting into a certain trade at a certain time because of the time at which we're looking to get into it. So that's how trading has kind of evolved, and it is sort of prudent to sort of evolve with these markets, and that's what we look to do. So look, just to clarify, feel free to go to our website for more information. If you do want to get one of our memberships, we do try to make the cost as affordable as we possibly can. It's a good quality education. We've got over 50 hours of education in your members area. For our VIP traders, 4 different courses, and a lot of it is not information that you're going to find online. It's information that we've built. It's education that we've learned over collectively sort of 40 years of trading these markets. So some really brilliant stuff, and you get our signal service. You get access to our trade plan webinar every evening. You also get access to our Capital Growth live trade room, so that's where we trade daily time frames. So some of our traders can only, put in 15-20 minutes or perhaps 30 minutes a day in the evening to trade daily time frames, and that's fine. We service that as well, and we're looking to grow capital over the medium and longer term. So a lot of the principles are the same, but some of the techniques that we use are slightly different. So that works very well for those looking to grow capital and perhaps don't have the time during the trading day. So go to our website for more information. The details are there up on the screen. And what we're going to do is we're going to wrap it up there this evening, guys, or for the day, should I say. We'll be back online again tomorrow at 12 noon, so we do hope you can join us for this event, and feel free to join us in tonight's Trade Plan Live webinar, which is at 9 o'clock UK time for approximately 30 minutes. So feel free to get that information, and please do, if you've not done so yet, please do subscribe. Click the subscribe button on our channel, and click the bell symbol, and you'll be notified when we go live, and also when we post. We've got a whole variety of educational content for you, so feel free to get involved. We'd be delighted for you to join us. We're very excited about what we offer traders, and we'd like you to be a part of it if you would like to. So on that note, thank you very much for joining us. Apologies for some of the technical difficulties with our HD camera, so we'll try and get that sorted out for tomorrow, and we'll be fully active. So from everyone here at the live trade room, it's been a pleasure, and we'll speak to you soon. Bye for now.